Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Let's tell you the top headlines at this hour. Markets continue to surge after scaling record high levels. The Nifty heads towards the 11,800 mark. Most sectoral indices are trading with gains. Jet Airways has fallen the most in 3 years as the airline runs out of options to stay afloat. PTI reports that Naresh Goyal has withdrawn his bid for the airline. Private financials are leading the gains on the Nifty. ICICI Bank is the top gainer after Goldman Sachs sees further upside for the lender. And on the other hand, Wipro is the top loser on Nifty ahead of its fourth quarter results post-market hours today. Good afternoon, Neeraj. Well, the markets could be scaling higher levels. I think the bigger question here is, can India afford to shut down an airline like Jet Airways?
Yeah, well, two interesting things. And Navneet, don't forget that the bond yields in the bond markets are also showing a completely contrasting picture to what the equity markets are showing. But, well, let's talk about all of those piece by piece. Firstly, the equity markets, because that's the big story, because we've hit fresh highs. And in today's session, while there is 1.5 hours left, you can safely assume that we're not going down the way we did the last time when we hit the highs and then ended in the red. It's a strong day of trade and it's lasting. So 11,801 is quite remarkable. We're very close now, almost seems within touching distance of 12,000. So that's good news. The bank Nifty's led the charge today, 432 points higher, and this is a really strong last couple of hours of trade wherein we were about 1% higher and then we moved up and now we are the new plane. So let's wait and watch what happens here. Also important to keep an eye out on the world markets. Remember, it's a truncated week for our markets, for the world markets as well. Good Friday would be a holiday, but tomorrow is a holiday for our markets. So important to keep in mind what world markets are doing as we shut shop today. Well, they seem to be a happy place, in a happy place. I don't think the US markets would be doing something dramatically different because Europe is doing all okay, and it would take cues from Dow futures. So Dow futures for now in the positive. So the world seems to be a good place. We are doing very well for ourselves. The question mark is, can we last? Difficult to answer. Let's pull up the large caps first. I'm sure we'll talk about Jet Airways. Devina will speak about that. Navneet will probably refer to that in the FNO chat. But let me talk about the large caps. And save for, like I was saying, save for, actually in the morning, you didn't have Tata Motors and Wipro correcting. In the morning, you just said Infosys as the top loser. That's recovered. Wipro down about 2.5% ahead of the results and the announcements. Tata Motors takes a bit of a breather in the session today. I would reckon it's nothing but a breather. But the gainers and banks are largely the key winners. ICICI Bank 3.5% on the Goldman Sachs upgrade. IndusInd Bank 3.5% as well. And consumption is not far behind with Titan piling on the gains, 2.5% higher for that one. Autos by and large have done reasonably okay today. TCS increases the valuation gap between itself and Infosys in a meaningful way. So up another couple of percentage points. And stocks like Maruti and others are also doing remarkably well. So all in all, I mean, I can rattle off names by the dozens, but almost everything is in the green, very little in the red. What about the broader markets, so Devina? How have they stood out, and what is Jet Airways doing?
Well, Jet Airways, for one, is one of the top losers in the broader market space, and rightfully so. The stock is plummeted almost more than 10% in intraday trade. Heavy volumes at that too, so a big knock to the chin for the aviation company. But what is Jet Airways' loss is the other airlines gain. I'll come to that in just a bit. But the other one, and the universe outside of Jet Airways, also deserves a lot of attention. And the new listing then, Polycab, that's almost 24% higher post its listing. So that's 666 is where the stock's trading at. Remember, issue price band, the upper band was 538. At that price band, its price to earnings multiple was about 16.7 times. At this current price, it's probably nudged beyond 20 times. So it's brought in itself in line with some of its other peers within the same space. Other stocks are moving about in trade, and these have been regular movers. So a stock like a PC Jewelers, now with this tally of 15%, for the last 7 days has piled up 60%. That's not a small figure to look at when you're taking a look at a stock of the last 7 days. Indigo makes yet another record high today. It surpassed its previous record high yesterday, had a closing record high as well yesterday, and today has surpassed that. Vodafone Idea, that continues to accumulate more interest yet again. Volume buzzers, Deepak Fertilizers, Minda Industries and Jindal Saw. Metals is a pocket. market, attracting a lot of interest, and Jindal being one stock which has done well for itself in today's session. And stocks other than Indigo, which are trading in and around their 52-week highs. We've got a Bata India, Kajaria Ceramics. Kajaria, in fact, just a few points away. 634 is its 52-week high, and that is trading somewhere close by. And 1439 is Bata's 52-week high. It's there just about 6 odd points away. Dr. Lal Pant Labs, that's not doing well today, but it's still around its 52-week high. But those are that's what's happening in the broader market space. Let's take a look at the more liquid universe for the derivative space. Navneet is joining in with more details. Navneet.
Thanks for that, Davina. I just want to pull up Bank Nifty first before I take you through the futures on Nifty. Bank Nifty is currently at 35.5. Let me tell you, all-time high levels in Bank Nifty are at 36.48. So we're just about 95 to 100 points away from Bank Nifty from hitting that all-time high levels. Watch out for that. And obviously, in the future side, you're seeing some long positions coming by. And similar is the case for Nifty futures. We've seen some OI build up in today's trading session. Not too much. Premium is also hovering around the same level where we closed yesterday. But pull up the India Volatility Index. When we opened the markets today, it was down in trade. But once again, it's inching very closer to its 52-week high level of 22.8. So watch out for that one. Options data, I think so far the bulls and the bears were fighting on for that level of 11,800. As in when we started the show, we've already crossed that mark. So call positions are now being shifted to 11,850. And there is a lot of put writing which has continued today as well after yesterday's writing session. And put writers of yesterday are pretty much in the money in today's session as well. So good going for them. And the next level that the market will be watching out will be 11,850. Indigo, in terms of stock futures, Davina mentioned it is at all-time high levels. Fresh long positions seen for this one as the open interest has surged. Wipro comes out with its numbers today. Eyes on the quantum of buyback which will be announced. So stocks lower actually ahead of the numbers. And ICICI Bank topping the list. Biggest contributor in Nifty after Goldman Sachs has included that in its conviction list, increasing the target price to almost 491.
Well, let's begin with the market voice. Then Sindhu Samir of Emkay Global Financial Services with us on the show. Sindhu, always good having you. Thanks so much for joining in. A lot of things happening in the market, and we'll talk about all of these. At record highs, banks getting more upgrades and doing very well. Jet Airways in a bit of a limbo. Would want your opinion on all of these, if not market calls. But let's start off with we being at new highs, 11,800. Optically expensive valuations becoming even more expensive. What do you think happens next? What are your global clients telling you as you talk to them about the Indian markets?
I mean, there are myriad questions which you have posed me. Let's talk about the Nifty as such. So you said optically high valuations. Frankly, it is not the highest valuations. The Nifty is going forward, it is still available away from the peak valuations. So it is still not reached its peak. Let's hope that we have another 5-6% move from here, but it is definitely off from the peaks, calling for simply 1 year forward multiples. Now coming back to Nifty, what is driving Nifty? Of course, it is the banking piece. But then step back, we have seen the worst of credit cost, we have seen the worst of NPA cycles, and it's not that it is 1 year away. We are seeing that these cycles have peaked. So in next 1 or 2 quarters, we'll see that things will be coming back to normal. And earnings power of private sector banks, which was also compromised for last 3-4 years, will be coming back soon. So all that is driving the banking piece. Coming that what will happen in the days to forward or days to come. Well, anyone who is still invested for a year, 1.5 or 2 years also can see a nominal GDP compounding kind of growth, which has been there for last 15-20 years. That growth is definitely welcome. I'm not taking a political call. I'm not taking an event call. If you look back into the long arc of things, that is a kind of earnings growth which has been delivered by the markets. So if anybody is satisfied with that kind of a growth, I think that will be delivered far and long.
Sindhu, what about what's happening to banks? I know you mentioned about private sector banks and the earnings thereof. I'm beginning to wonder if it is now starting to look like a crowded trade. It's probably still not there, but there is a bit of a commonality to almost everybody right now saying that if there is one space that they would bet with their eyes shut, it is the corporate facing banks, because the argument is same. The issues of the past are no longer there. the credit costs will come down. It will show in the P&Ls, and it is not showing in the valuations as yet. Everybody is saying the same thing.
No, but see, it's just because a particular trade is a consensus, it is necessarily not leading to a conclusion that that trade will falter. I mean, look at it. In 2003 and 4, private sector banks had roughly 10 to 15% of market share. Lo and behold, they have 30% market share. Now, this was the same trade in 2003, 2004, 2005. If we would have run back that argument in those years, we would have actually missed the biggest opportunity which was created, one, by the opening up of the sector and the Indian consumerism. Second is that if there will be a recovery in the infra space also, I, as an individual or any other investor, might not be comfortable to pick up an infra piece, but the banks offer you a leverage play on that piece. Also, just look back 10 years, India crossed 1 trillion mark. That I'm talking of 2007, 2008. A lot of happiness was spread. That was also the year when India crossed $1,000 per capita GDP. Lo and behold, 10 years, India is already a 2.7 trillion economy, and the Indian per capita GDP will be soon crossing $2,000. Now, if this is about to happen, there will be a surge in the demand of financial products. Now, banks being at the center of that demand. Now, if we do not get bullish on this sector, then what else? Also, it is a human fallacy. See, majority of good stocks or banks, or for that matter, any other franchise, they are very well priced for next 1 or 2 years. But the super trade comes when somebody invests into the names for 4 years or 5 years. That's when you make the real returns. So I am still saying, of course, it is a common trade, it is a consensus trade. But if you also look from the fact that in terms of valuations, these are not the peak valuations which these banks have commanded. Just 3 or 4 years back, the bellwether was available at 4 times price to book. It is somewhere around 3.58. I mean, other banks are way off their price to book valuations, what they were even commanding in 2000, 2007 or 8. Also, if I have to play the Indian GDP story, how best to play the Indian nominal GDP growth story? That is through these banks. Just 2 years back, the system credit growth was struggling at 7 or 8%. Now the system credit growth is now 14 to 15%. So the system credit growth has doubled. If these banks cannot lend at least 10 percentage points more than the system credit growth, what is the point? So I am not saying that look away from the valuation and just take a blind plunge into these names, but a smart valuation-led jump into these banks can definitely make long-term profits.
All right, Sindhu, just one last question before we wrap up this discussion. I mean, now that we're already into Q4 and keeping in mind the prices and the valuations which most of the companies have been trading with and the larger names post this rally, what is it that you're going to be banking big on? What is that conviction idea that you have that looks good even at the current prices?
So I will not name a single piece, but as I have been reiterating for many, you can say now, I think it's been 2 years since I've been coming on the channel, the consumption piece will be the driver piece for the Indian GDP. And anything catering to the consumption piece will be the safe place. Now, I am giving a fairly broad definition to what I am bullish upon. At the same time, it's not as restricted a definition that one cannot look beyond a single sector. I have waxed eloquent over banks, but the consumption piece is the centerpiece, and consumption plays are easy, predictable plays. So if I am at the moment addressing the retail audience of this channel, then that is the guidance I can offer them. So anything around the consumption piece will be of help, and reasonable, I repeat once more, reasonable profits which are in conjunction with the nominal GDP growth rate of this country can be made. By the way, the nominal GDP growth rate of this country has roughly been 13 to 14%. Now imagine if somebody compounds his wealth at 13 to 14%. In the long arc of things, it is a very super decent return. Go back when Indian reforms process started in 1991. My memory says that the Sensex was somewhere around 1,500 or 1,000 odd. From those times, today we are roughly in the vicinity of 38,000-39,000 of Sensex. Tell me one asset class which has compounded money at this multiple. And I am talking of Sensex, which is an average of 30 stocks. There have been many multi-bagging opportunities. So yes, for the time being, market has gone up. It might look scary for some people, but then it is not the timing of the market, it's the time in the market. So I'm leaving this interaction on a very happy, optimistic note.
That's our happy and optimistic as well. Sindhu, Samir, thanks so much for taking the time out and joining us and giving us that perspective. That's the view from Emkay Global. Sindhu, Samir, bullish. Well, if you can be bullish on the markets, I don't know how can one be bullish on Jet Airways. That's the next discussion, in an extended one. It's run out of options to stay afloat. The debt-trapped airline is said to be contemplating on shutting down operations, at least temporarily, as lenders are yet to transfer the 1,500 crores promised to keep the airline running. This in turn has prompted the Civil Aviation Ministry to start thinking about Jet Airways vacant slots. Joining us now to cover all the angles are Ridhima Saxena, Vishwanath Iyer and Panvi Arora. Ridhima, I'll come to you first. Some hard decisions had to be taken by Jet board today.
While there's still no official confirmation from Jet Airways yet, sources have confirmed that the airline will remain operational for now, but they were expecting an announcement on temporary suspension of operations by this evening. Apart from that, there are presently 7 planes that are operational along the domestic routes, and the international operations continue to remain suspended till Thursday, April 18th. Company spokespersons confirmed to Bloomberg Quint, the company spokesperson that were present here. Apart from that, a source also confirmed to Bloomberg Quint that Jet Airways founder Naresh Goyal, who had put in a bid earlier through his general sales agent Jet Air, along with Future Trend Capital and Adi Partners, all of them have withdrawn their bids. Now, even though the board meeting with the management of Jet Airways concluded around 1 p.m. in the afternoon today, full details of a final resolution plan or even word on temporary suspension of operations, the details of that are yet to emerge, and an announcement may be expected this evening.
Thanks for that, Ridhima. So as of now, remember, the decision will come in the evening today. And today there was also a meeting of the lenders where there was discussion whether the 1,500 crore money that they were looking to infuse into the airline, what's happened with that one. Vishy is joining us with more details on that. Vishy.
Right, Navneet. So 1,500 crore was promised as part of the bank-led resolution plan back in March. On the 25th of March, the lenders agreed to infuse that money. As part of that, there were a certain number of conditions. Naresh Goyal stepping down from the board, stepping down from his position as the chairman of the company, which were all fulfilled. The lenders also said that they're going to give this money in a secured format. So as part of that security, they had asked Naresh Goyal as well as Etihad Airways, the international partner, to pledge their equity stake in the company. And only after that will they give out the money. Now, we know that Naresh Goyal has pledged about 26% of his stake with Punjab National Bank. Not sure as much as to what Etihad has done. There has been no announcement. So assuming that they haven't, the lenders have therefore not extended those funds that were originally promised. Important to also notice that when the lenders took this decision to extend that money, it was all under the RBI's February 12th circular. And because the whole plan was prepared because the powers were extended to the banks as to how they can resolve an account. After that, the Supreme Court struck down the circular. So there was nothing offering an immunity to the bankers in the form of, there is a guideline and therefore we are following it. So lenders obviously held back. No pledge, no guideline directing them to do anything. They held back that money. Obviously, that has caused a lot of problems for Jet Airways. They have not been able to pay employees. They have not been able to pay lessors. Planes have been consistently being grounded. And as Ridhima pointed out earlier, only 7 planes are flying at this point in time. Their slots, according to what sources are telling us, are being allotted to other people. There is a conversation at the Civil Aviation Ministry for that. Now, in this current scenario, there is already a bidding process that is going on. Now, according to what our sources are telling us, there are 6 people who have submitted initial interest. Initial interest by no means is an actual bid. It's only
conduct due diligence. And
yes, so it is entirely possible that people who opt for the due diligence may not actually submit a bid. We don't know what is happening there. The lenders have already extended the deadline for the final submission of bid from the 30th of April to the 10th of May, saying that you have more time to conduct your due diligence and then accordingly submit the bid. Now, according to what Ridhima was telling us earlier, Naresh Goyal has already opted out of this bidding process. So that, assuming 6 including Naresh Goyal, that leaves about 5 more people in the ring. What we know from our sources is that on Friday, when the EOI deadline passed, just before that, Thursday evening, there was a call from SBI Caps, who's running the entire process, and the bidders, where they explained the current status at Jet Airways, and the bidders have expressed their concerns because they're not sure if they come into the account, if there is anything left to save, if there's anything left to turn around. In all of this uncertainty, without that 1,500 crore, it is unlikely that Jet Airways finds any kind of funds to just remain operational. Now, there is buzz that they are going to temporarily shut down their operations altogether. They've already stopped the international operations. So that is yet to be confirmed. As and when we know, we'll be talking about it. But clearly for the airline to survive, those funds are necessary, but the banks are not willing to give in. Why? Well, their past experience with these situations have been very, very catastrophic. In 2017, the CBI arrested senior officials at IDBI because they had extended about 900 crore worth of loans back in 2009. That was 10 years ago. And then after that, they were arrested. All of those officials had already retired, but they were all arrested for fraudulently entering this transaction because, according to CBI, the officials did not follow credit guidelines that IDBI has set up. Sure. Obviously, this is playing on the minds of the lenders. Lenders are saying that we're looking for some kind of go-ahead, some kind of clarification from the government, and unless we get that, we are not going to extend those funds.
Will there be any announcement by SBI Caps in the evening today?
We don't know at this point in time whether SBI Caps is going to make an announcement because, according to some of the other news reports, there was a talk about, final bidders who might be interested in the process will be announced, but we're not sure about that yet. As and when the announcements comes, we'll of course know. But the lenders have already said that they're working with the company and they're trying to infuse funds wherever necessary, but 1,500 crores definitely not coming for now.
All right, Vishy, a catch-22 situation.
Very much.
For Airways there. But as Vishy highlighted, just 7 aircrafts have been running. So what does that leave the other slots that have been vacated by Jet Airways, and what is the Civil Aviation Ministry going to do about that? Bhanvi is joining in with more details as to how these additional slots, these 200+ slots that have been vacated by Jet Airways, are going to be distributed, and what is the Civil Aviation Ministry doing about it? Bhanvi.
Yeah, so the government is planning to provide these unused air slots of Jet Airways to other airlines, and for this the aviation watchdog, which is Directorate General of Civil Aviation, it will hold a meeting with the airlines today to discuss the issue. Now Jet Airways has drastically reduced its operations, and it's currently operating only 7 planes. There are a total of 209 airport slots of Jet Airways, and of these 209, we are learning from sources that over 25 unused slots have been given to the other airlines. Now the government has to take a decision on the rest of the slots to be given to other airlines today. There is also a meeting with the aviation secretary with the other airlines today to discuss the matter of airfares and passenger inconvenience regarding Jet Airways. All these issues the government will take a final call on all these issues by Friday today.
Okay. Bhanvi, Ridhima, Vishy, thank you so much for joining in and giving us that perspective. Let's get in some experts now to talk about what could happen. 3 aviation sector experts: former Executive Director at Air India, Mr. Jitendra Bhargava, Mark Martin of Martin Consulting, and Amrit Pandurangi. Gentlemen, all of you, thanks much for joining in. Mr. Bhargava, quick thoughts out here. What happens next? The banks or the lenders, which would have hoped for a higher asset value and hope that they would give the lease line and therefore the company will not go down the NCLT route, have kind of punctured that in between. What does this lead Jet Airways to now?
See, the only thing certain at the moment is that the uncertainty will continue. Now, it's a sad situation that the money is not being put in, something that is desperately needed by Jet. As you very rightly said, there are only 7 aircraft flying, and when you have such a notional presence in the market, it is as good as the shutdown, which is likely to take place this evening. Now, I don't think the banks at this juncture can infuse funds. They have their own problems. Again, your reporter did very rightly said that they can face consequences subsequently if they do a rush job. They are going to be following the system. But this is not something which is desirable in my view. There was a certain pattern that we saw as far as Jet is concerned. Of course, Naresh Goyal could be the first culprit. He dilly-dallied on quitting the board, a condition that was put by Etihad and by the other lenders. If that had happened about 4 months ago, probably things wouldn't have worsened to this extent. But having said this, now what is the way forward is the question that people are going to be looking for. Now, there are people who have put in their expression of interest. Now, these are not binding. They can be withdrawn. Naresh Goyal also put in his bid. He shouldn't have done something, but he did for whatever reasons. He's been made to withdraw. Now, if Etihad, at least 1 or 2, I'm not being very optimistic also, even if 1 or 2 the companies which have submitted their expression of interest as serious bidders, the blenders must fast-track the entire action plan. It can't be that I have a timetable till May 31st or April 30th. The need for funding is urgent, emergent, and they must do that. And I only wish, taking care of all the rules, regulations, not to be accused by anyone subsequently. Banks, lenders, they owe it to the public, to the traveling public. Jet has been a good brand. Jet has served the country, the oldest private sector airline. Now, you cannot allow, A, the employees being at risk, the airline being at risk, and what happens to the market dynamics.
Right.
But one thing that needs to be understood very clearly, and I've said this often, that the market dynamics of Indian aviation are such that a full-service carrier is unable to sustain profitable operations because the fares that they command in the market do not adequately compensate for the additional services and amenities they offer to a passenger vis-a-vis a low-cost airlines. Indigo and SpiceJet have expressed publicly that there is a need to increase the fares, but they have not done so.
Yes.
Perhaps because they believe that increase in fares would affect the market growth rate, but so be it. Economic viability of Indian carriers is essential. A balance needs to be struck between ensuring market growth, even if it needs to be simulated through low fares, but it cannot be to such an extent that every few years we see the demise of one airline. Yeah,
we got that, Mr. Bhargava. Lots of moving parts here for Jet Airways. And Mark, I want to bring you in here. I mean, you know, while there has been about 5 expressions of interest, like Mr. Bhargava said, and like we all know, that these are not binding. The deadline has been pushed to about 10th of May. The point here is being, for one of the largest private airliners within the country, is this going to be a hard landing or a soft landing? I mean, we got no indications as of now. Even the 1,500 crores, which probably would have helped keep the company afloat or, you know, live a little longer in peace, has not happened. It's not come through by the lenders.
Hi, thanks for having me on Bloomberg today. You know, let's be very clear. The ones who, the banks, let's understand what was the remit of the bank. The whole idea of SBI was to prevent Jet from crashing. They were mandated to bring in with that objective. The whole intention of the SBI was to ensure that they survive. Now, what on earth has happened in the last 3 months? We've seen SBI clean the company Jet Airways of its promoter. Now, was that something which was intended, or was that according to plan, or was that proposed from day one? The second part is, if SBI was ideally mandated to help give Jet a second lease of life, help it survive and bring it back on its feet, we have seen no payments being made by SBI towards retaining the fleet or paying off lessors. From 110 aircraft, they're now down to 7. So what has the bank done to keep Jet afloat? Now it just comes more and more clear that SBI's intention was not to save Jet Airways, but more of looking at a stake sale and cleaning off the company of its promoter. I don't think that's I don't think that is anything that anybody in the industry signed up for. So, and now we're moving to the stake sale by banks. You know, even if you want to move to a stake sale, what on earth are you selling? I mean, what part of jet is saleable today? You have an airline which is down to 7 aircraft. You've lost 120 aircraft over the last 6 months. You've lost all your pilots. Your flight attendants have taken job elsewhere. Engineers have put in the resignation and moving to other organizations. So if you want some, so clearly there is no value. There's no value proposition of buying jet anymore. Today, if you got 10 to 15,000 crores, would you actually buy into someone else's bad mistakes, skeletons in the cupboard, and financial insanity? Or will you put that same money and set up your own airline because the FDI policy allows you 49% and 51% from an Indian entity?
Right.
So, if there's anyone who's kind of, I think we need to be clear, can Jet find a buyer? We've got the bids. I think it's a good thing. The bids are there. But does it really, lucrative?
We'll have to wait for the announcement to come by from SBI Caps, who all were the bidders and who gets to win the bid if there is any qualified bidding which has taken place and if the lenders have approved. But my next question is to Amrit. Amrit, we know by now what has happened, what is unfolding for Jet Airways. Lenders have refused to pump in the additional 1,500 crore which was required. I just want to ask you one question. There are also 20,000 employees there. One of the reports suggested the pilots of the company actually approached Prime Minister Modi to intervene. What's the best case scenario according to you now ahead of Jet Airways?
See, in my view, this is a private company operating in a competitive consumer market. So the government should have as little as possible to do with this entire transaction, including trying to bail out pilots, employees, the company, the banks, anybody. And if they try to do it, generally they end up messing it further. So the best thing for the government to do is to leave it alone, let the market decide whether the jet company will crash, will have a hard landing, soft landing, whatever, and whether the banks will have a significant loss of dealing with jet. So the government should stay as far away as possible and stick to simple and basic regulatory issues which are already in place from safety perspective and so on, and not allow anybody to violate the regulations or go light on violating the regulations in this scenario. That is from the government perspective. And I think SBI or any of the banks trying to even run the company or take over the company is again another big mistake because none of these people have the ability, the focus or the time to even run a bidding process, let alone run an airline. And therefore, I think the best thing they should do is to quickly conclude the bidding process, choose whoever is the best bidder, and tell that successful bidder to get on with the job of trying to resurrect and help that person through further lending if required, essentially to get back more of their old loans. Not for any other reason, but to say that, look, we have selected you, you have now taken the responsibility of running this airline. There are only 7 aircraft. There are only so many slots available. We will now help you trying to get back, on your feet by getting more slots operational, by getting more aircrafts back from the lessors who have impounded them and so on. Right. Till that time, they should really not do anything other than hastening the process of the bidding itself.
Well, it remains to be seen, gentlemen, how it pans out now going ahead for Jet Airways, whether the airline gets temporarily grounded or it finds a new buyer. Mark, Amrit, as well as Joindre, appreciate you all joining us this afternoon and giving us your views on the ongoing process which has been taking place with regard to bidding of Jet Airways. But switching focus back to the markets, we're trading above the mark of 11,800. Good time to bring in our experts then and get their views what to do at these all-time high levels on Nifty. Amar Singh of Angel Broking is here with us, and also joining us is Sacchitanand Uttekar, Deputy Vice President of Tradebulls. Good afternoon, gentlemen. Sacchitanand, let me come to you. Are you initiating any fresh long positions at these high levels?
Well, good afternoon. In fact, Nifty is quoting now at the upper end of the range that we're expecting. We are expecting that the indices should oscillate within this particular band of 11,850 on the higher side. And on the lower side, I think the supports have now shifted to 11,600, 11,550. So, since we are quoting at the higher end of the band, it is advisable to book some profits from the longs and create some short positions here. So from a momentum perspective, we expect that there could be some profit booking pressure which could lead to some selling eventually. So 11,877 is the level on the futures which should be kept as a stop loss. And on the immediate basis, I see this we expect Nifty to come down to 11,750. And that's why we are not initiating any fresh long positions here as far as the index is concerned, though the broader trend remains more consolidated to positive. But since we are trading at the upper end of the range, it is advisable to create some short positions.
Amar, what about you? Are you booking out profits at these levels, or would you stay invested?
No, I would say that way Nifty has rallied today clearly reflects that there is more to the upside, and only the key point here is that sustaining above 11,750, 760 zone. Technically, I would say that Nifty continues to remain extremely strong. Yes, on the daily charts, there was some bearish divergence, but taking out the resistance and sustaining above that is a sign that there could be more bullish on the upside. But I would say that at least 50% of the profits definitely should be booked. I wouldn't go for short because the trend is greatly in favor of the bulls. So I would rather wait.
Okay, that is the call on the index by Amar and Sacchitanand. Let's get in some stock-specific ideas. Remember, it's a truncated week. Tomorrow's a holiday, so you probably would look to carry forward these ideas into Thursday's trading session. But Amar, keep it with you first. Axis Bank and Titan are the two stocks that you're recommending.
Yeah, Axis Bank is one stock one can definitely look at because looking technically on the charts, Axis Bank continues to remain strong and firm. And after forming a base around 745, 750 levels, the stock has bounced back and currently it's around 773. Technically, it continues to remain strong on the chart. So any pullback towards 762, 765 ideally can be used as a buying opportunity with a stop loss of 747 and a target of 797 on the upside. And the second stock to look at is Titan. Titan is one stock, if you look at it, it has been consolidating for quite many days after correcting from almost 1152 levels to a low of 1083, and today it's up. If you look at it, it's up by almost 3% today. So Titan, and technically if I look at the long-term charts, it continues to remain strong. Even the intermediate-term trend continues to remain strong, and it is in overbought territory though, but still any dip should be used as a buying opportunity. So one can look at buying Titan around 1105, 1110 levels, and with a stop loss of 1075 and a target of 1165 in the short term.
All right, that seems to be a consensus trading idea from both Amar Singh as well as Sacchitanand. Sacchitanand, you too have Titan in your list, and you are buying. All right, I think we've lost the line with Sacchitanand. But, okay, he's come back. Titan, one. TVS Motors is the other one that you're liking, and you're selling REC futures.
Yeah, that's right. If you look at Titan, the stock has been in a very strong secular uptrend. In the last couple of trading sessions, we saw, it oscillating within a very narrow range of 1120 on the higher side and 1100 on the lower side was acting as a very good support. Couple of days back, we saw a pin bar kind of formation on the daily scale, reconfirming the strength in the support of around 1100. If you look at the overall option activity, 1120 was the strike wherein the call writers were very aggressive since last 5 trading sessions, and today we have seen that when the price action got elevated above 1120 levels, that has forced the writers to push their positions forward. So probably what we are expecting is that the stock should again knock fresh life high levels. So that's why we are expecting that the move should extend right up to 1155 on Titan. The stop loss for the trade should be now placed at around 1110 on the futures, and it is more on the positional side. TVS Motors, yes, the overall structure for this particular counter has been improving substantially. If you look at even yesterday's trading session, we saw a spinning top kind of formation, And if you look at today's opening, after a confident opening, we saw a good follow-through action in this particular counter. What we are expecting is that this particular move can extend right up to 530, 532 zone, where it's 200 exponential moving averages placed. So from a momentum perspective, still long positions can be added. 505 is the stop loss for the trade on futures, and a probable momentum target close to around 530, 532 should be achieved in a day or so. On the sell side, REC Limited, if you look at the structure, what we are observing here is that the stock is forming a bullish, a rising wedge kind of a formation, which is inherently a sign of bearishness. So if you look at the overall structure, the 150 is the key level for momentum, where it's 5-bar weekly average is placed. What we are expecting is that the stock should slide back to around 144. So that's why we are recommending short positions here. The stop loss for the trade should be placed at around 155.
Just to bring it to the notice of our viewers, TVS Motors was also highlighted in our Bloomberg Edge segment in the morning show, where Yash spoke about the MACD pattern and how it's turned positive for TVS Motors. Historically, in the past, 6 out of 9 times when this cross has happened for TVS Motors, the average returns have been more than 7%. So that's a really good hit ratio for TVS Motors. So watch out, keep watching out for the BQED segment on a daily basis. Rohit Srivastava is also joining in right now to take us through his views on the market. Rohit, thanks very much for taking out the time. What have you made out of the fact that, we're currently perched at the record highs, but the fact that we've seen this rally starting off in mid-February sometime, 25th of February 2016 up until now is when this rally has kicked in. It's been the slowest. Nifty has been just up about 67% compared to the other bull rallies that we've seen in just the recent past.
No, that is true. And actually, if you look back, you can actually see a slowing pace in each rally that has occurred since 2008-9. So you had the first one between 2009 and 10. And then you had the second one, which started, after 2014, and then the third one after 2016. So each of these rallies, if you actually measure, is smaller than the previous one. So, but then that takes you to a very, very long-term big picture of the scenario that, you're losing pace at the end of this, multi-year move. But at the same time, time-wise, it has stretched on pretty long. So despite, having divergences in terms of momentum longer term, we haven't really seen it come to a halt, and so you have to continue to watch the near-term, levels and indicators as to when that will happen.
Okay, Rohit, stay on with us. A lot of stocks are moving around. I just want to pull up the intraday chart of Reliance Capital. That's fallen almost 6 to 7% in trade right now. It's seen currently almost at days low, 7% lower at 171. We'll keep highlighting some stocks for you, but talking about the banking sector, which has regained its confidence, the stocks are still trading at expensive valuations, however, says Goldman Sachs in a brokerage note. Shefali Malik joins with the factors that have prompted Goldman Sachs to re-examine its outlook on some of these stocks. Shefali, over to you.
Well, it's a very interesting report because if you want to look at the trends in the banking sector in some of these banking stocks over last 15 years or so, that's what they've analyzed in this particular report. And based on the current scenario, Goldman Sachs has actually upgraded and downgraded a couple of stocks. So what they're saying is that they're actually making a comparison to the 2003 to 7 period, which was the last time, which was actually a good time period for the banking sector. And the last 2-3 years are comparable to that particular period. So they're saying that in comparison to that period, the asset quality pickup is going to be very strong from here on. The credit costs are going to come down. Obviously, if the asset quality is going to improve, the banks are going to make lesser provisioning, but that has already been factored in terms of the valuation. So what is going to make the difference from here on is the operational performance of the bank. So that is going to be the key differentiator that the shareholders will be looking at. They're also saying that premium for large franchisees, scale and efficiency is going to drive shareholders' returns from from here on. And this cycle is different from the previous cycle of 2003 to 7 in terms of return on assets and business growth for PSU banks. So for PSU banks specifically, they're saying that everything is going to be good, the asset quality is going to improve, even the margins are going to be better, the credit costs are going to come down. But where they'll actually lag behind the private peers is in terms of the return on assets. So that'll be something interesting to look forward to. So based on this analysis, they've actually given out their calls on a couple of counters. SBI remains their favorite from the PSU pack, target 390, and they're saying that this one has a potential to take its ROA to 1% level. They've also put out note on ICICI Bank. They actually have that in their conviction buy list. They're maintaining the buy rating on the counter with the target price increased to about 492 rupees a piece versus 451 earlier, and they're saying the turnaround in the corporate business is something that is going to really work for the bank, and they expect the bank to deliver return on assets of about 1.8% and return on equity of about 17% over FY 20 to 21 period. About IDFC Bank, they've downgraded that one to a sell rating and have maintained the target price at about 45 rupees per share, and they're saying that they expect the bank to generate about 4 to 7% return on equity over FY 20 to 22 period, less than cost of equity for next 3 years. So that is going to weigh down on the same. They've also downgraded PNB to a sell rating. Target price, however, they've hiked it to 74 rupees versus 70 earlier. And here they're saying that the exposure that the bank has to the agri and the SME segment, which is about 35% of the loan book, that is going to be a major concern for them, especially considering the kind of promises that most of the political parties are making with regards to the rural India. So considering that they have a high exposure to the agri book, that may come under pressure. LIC Housing, that has also been downgraded to a sell rating, and they've hiked the target price to about 437 versus 423 earlier. Here there are structural issues with regards to the profitability, and the stock price has a potential downside of 20% from the current levels. So a very detailed note coming in from Goldman Sachs on banks.
Very detailed note, and we've seen some stocks also moving on back of that note today. Thanks a lot, Shefali, for joining us and taking us to the contours, or rather what was important in that report. But Rohit, if I could come to you, if I look at the rally on Nifty, at least for this calendar year so far, the major contributors have been the likes of Reliance Industries and also a couple of these banks from ICICI, Axis, or also HDFC Bank, and of course there were some IT stocks also included there, TCS and Infi. My question to you is, if you think that the markets would even scale higher from these current levels, do you think the contribution will continue from these usual suspects, or there can be more sectors which could participate here?
So I think the answer to that question is a slightly backwards, because if you expect that this market run should actually continue, then you want broad-based participation to start happening. So far, if you simply look at the mid and small cap indices, they've not even retraced 50% of the entire fall that they saw over the last 13 months. So they're way behind in terms of where the big indices are. So you'd really want to see that catch up start if it is to be a sustainable rally. So the way we look at it is, if you don't get that participation, it would be a sign that whatever move you're getting on the upside is pretty much an exhaustion move, one that's happening because of panic buying or essentially a last run in the market. Only when it becomes broad-based is when you can take a call that this is more sustainable. So we're watching that closely. I don't think we've still had a breakout in the broad market. Many stocks, in fact, are beginning to lose momentum over the last week or two, and the momentum essentially is continuing only in the big names and very specific sectors.
Okay, Rohit, just getting a perspective from you on the comeback of the auto pack. I mean, while we've been talking about the last probably few months where the pain has been pretty evident on their month-on-month volume numbers, the high inventory levels, particularly in the passenger vehicle space, now that the two-wheeler inventory levels have been coming off. But the month of April has not been bad. In fact, starting end of March itself, the recovery has been pretty good for the auto pack. Is that likely to turn the leaf or turn the page for the auto industry as a whole? And do you see that as a reflection in the Q4 numbers for most of the larger names?
So I think it's a tough call to really call a turnaround this early, because you saw a first slowing which was pretty much across the board. So it was not restricted to one particular company or the other. We've seen weakness in almost all of the auto stocks, whether it's Maruti, Ashok Leyland, Tata Motors. All of them have corrected pretty significantly. My sense so far is that whatever rally you're getting from a very low base is probably counter trend in nature. Unless something changes, and it's pretty early to say that something has changed. So we would continue to maintain a stance that once you have this upside rally complete, then in fact it may even be complete in some of these stocks. You might just have a few more pushes up and down, and then probably you would start seeing weakness again in the sector.
Okay, Rohit, we'll leave it at that note. Thanks a lot for joining us and taking us through your views on the markets and also a couple of individual sectors. Well, the last sector we discussed with Rohit, which Davina asked, was the auto space. Remember, it's seen the slump that we've seen in the auto pack after the numbers came in the month of March. It was the lowest in the last 5 years. But from there on, the sector has staged a remarkable turnaround over the last 20 days, so to say. At least if you look at the Nifty Auto Index starting March 25th, the auto index has gained close to almost 10% since then, and a lot of stocks have been moving around. You call it Tata Motors have staged a very good recovery. In fact, you've also got stocks like Maruti, which did slip below that mark of 7,000 as well. So let's get a better view on this one, and let's get going. We've got Mitul Shah, who joins us from Reliance Industries. Hi, Mitul, good afternoon, and thanks a lot for joining us today on Bloomberg Quint. First, a question: what do you think has been the sole reason that we've seen the recovery in terms of stock prices? I don't know how the sentiment is, because there were a lot of reports floating around after the numbers for the month of March came by. The recent from FADA saying the inventory levels, at least for the two-wheelers, have come straight from 100 to 50 days. I don't know how true is that, but what, according to you, is aiding the stock prices?
The stock prices corrected largely in last 3-4 months to greater extent, and in few cases stock prices corrected much beyond the fair valuation. So on the other hand, as FADA has indicated, there is an improvement in terms of the pickup in the retail demand. Moreover, inventories also corrected sizably for two-wheeler passenger vehicle. Already commercial vehicles inventory were under control. So broadly, majority of the segments as per the FADA inventory level is under control, and on the other hand, retail demands are picking up. So these 3-4 factors started driving the stock performance in recent time.
All right. Let's talk a little bit more about what you anticipate the next few months to bring along. I mean, we're talking about a monsoon, a normal monsoon, and that in turn having its impact within the CV space for tractor makers. How does all of that play out, and do you see the incrementally being positive, and whether or not entry points are viable at these levels?
As you pointed rightly, monsoon is a very important parameter, because since past 4-5 years, majority of the volume growth is coming primarily from the rural India. And last year monsoon was 5% below, but in few territories like south and western regions, monsoon deficit was to the tune of more than 20%. So this has impacted the agri output as well as rural economy to some extent in past 6 months, which transform into lower volume growth and subdued volumes in the rural India. So if 2019 monsoon is normal, there would be an improvement in the sales across India, but particularly few regions which are big market for the two-wheelers and passenger vehicles like southern and western portion, that will bounce back more strongly. So this can result into volume improvement in the second half of the fiscal.
I want to come to you specifically on Tata Motors, but before that, we've been talking about, the story of how the stock has actually recovered from levels of about 150 that it touched post its Q3 numbers. The recovery has been stellar, and if you pitch it against what the auto index has done as a whole, there is a big gap in the outperformance posted by Tata Motors vis-a-vis the auto index. Is everything, whatever wrong had to happen with Tata Motors, most analysts seem to be believing that it happened in Q3 when they actually posted their numbers and took in that big blow. Is it improving? Do you think the on-ground situation probably has taken a turn for the better for Tata Motors now?
Tata Motor, despite being a auto company, there is a direct disconnect between the Tata Motors and other automobile companies, as JLR is the main key force and which is a global luxury car segment. So we cannot compare its performance with any of the other Indian auto companies. Here, 3-4 factors which were going negative, which started improving in last 1 or 2 months, which resulted into stock price upward movements. One is a Brexit got delayed already, which was a key overhang. On the other side, there is some improvement seen in the China volume as well as Western Europe and UK also started improving to some extent. But these also transform into improvement in the JLR business. But in addition to this, company has highlighted strong improvement in its Q4 result in one of its press release related to JLR clarification, wherein they also stated significant improvement in cash flow during the fourth quarter. So these transform into positive sentiment for the stock, and stock started reacting very positively. However, we need to be watchful on sustainability of the performance, even if Q4 will improve in terms of cash flow or profitability, whether it is sustainable going forward, because on the other hand, number of other challenges in terms of technology wise developments, R&D expenses, capex, technology expenses related to electric vehicles, all those things are highly big challenging for the company, and from that point of view we would like to see company's performance in coming 2-3 quarters. Then only will become in direction wise positive on the stock. Right now we believe that still the volumes not improved and overall performance of the JLR is still under pressure in terms of the cash flow as well as margin. So we would maintain our negative view on the stock.
Financial performance, we yet have to see that for Tata Motors, but in terms of stock price, 129 was the level it touched on 8th of February, and from thereabouts now it's trading somewhere about levels of 230. Mithil, first of all, apologies for my intro. He's from Reliance Securities. My last question to you is, which is your top pick? You've already mentioned you don't like Tata Motors, but your top pick in the auto pack right now?
Right now, we are more positive on the passenger vehicle segment. Within this, we prefer Maruti Suzuki. Maruti Suzuki still remains our top preference within auto space. Key reason behind this, we believe that Maruti would be a game-changing situation in the Q3, Q4 when the BS6 will be implemented. And Maruti would be much ahead in terms of the technology for BS6 as well as the cost increase. Maruti's cost increase will believe that would be the least in the industry. So when the Q4 will start and everybody will be ready with the BS6, Maruti probably will gain sizable market share from the others, and also it will regain lost pricing power to some extent. So this will transform into higher profitability for the company going forward, and Maruti will again start trading at premium valuation.
Okay, got that. That's Maruti that Mithil likes. Remember, 3 occasions, October when it made those lows of about 6,200 or 6,300 odd, from their Feb, from their April. 3 occasions where you've seen the stock take support closer to 6,400, 6,300 from where it's bounced back up, but it's faced a hurdle back at these levels of 7,300s. From a technical perspective, we'll try and get an opinion, but Mithil, we would like to thank you here for joining in with your perspective on the auto space. We're going to take a very short break on that note as well. But as we take that break, here are the management at Polycab Wires and Cables that listed at a premium of more than 17% today. The country's largest electrical wire maker says it's hoping to improve its EBITDA margins in coming years. Yatin Mota spoke to the management.
Today we have a unique business model. 80% is sold through distributors. 35% of our business is B2C. Our dependence on B2B is just about 15 to 20%, and our exports are at about 5 to 6% of our revenue. And I think with this kind of a business footprint, we are well placed to be able to ensure good stakeholder value in the future.
Okay. You said that you have been able to improve your margins, over the last few years or so. Talking about your margin performance moving ahead, how do you really see your EBITDA margins? Because you have been investing into distribution, into newer products, into newer facilities. Of course, there are setup costs relating to that. But, on a normal trajectory basis, what is the targeted EBITDA margin range that you see moving ahead, given the fact that your product mix is changing and probably consumer electricals could be a bigger pie for the company moving forward?
7.7% was our cable and wire EBITDA in FY14.
Okay.
And cable and wire EBITDA in FY18 was 12.7%. So in 5 years, we improved our EBITDA by 5 percentage points. That is a very important improvement. Because our consumer electrical business is just 4 to 5 years old and we are in the investment phase there, that EBITDA margin was at about 3.3% for FY18. So the blended EBITDA was at 11.7%. First 9 months EBITDA is standing at approximately 13.7%. I am not offering that as a guidance for the future. I am only trying to say our focus is on revenue growth, market share gain, distribution expansion, building the brand, and we will do all of this while driving our gross contribution up. With a higher gross contribution, our absorption of overheads will improve, and as a company, we will be getting greater market share, greater shop share, and greater brand share. I think that is our mantra in terms of our success.
What is the meaning of this word suspense? Suspense is something very intangible. Say we show somebody getting killed. For me, I'm not interested in a whodunit. The moment the audience knows that this person has done it and he has to ensure that he doesn't get caught, there is a certain tension in that. I try to give away as much as possible to the audience and still keep enough aces up your sleeve. I don't think any director would be able to say, okay, this is my style. I don't think I can define it.
Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
Better?
Same.
Now?
Abhi? I think so.
Sometimes we can't see what's right in front of us. And when it's clear, then the big picture becomes fuzzy.
Perfect.
The right lens always is.
Welcome back. You're still watching Countdown right here on Bloomberg Quint Live. We're 26 minutes away from closing. Important to keep a track on what's been happening. The Nifty 50 are now below 11,800. So that's 11,780, 90 points higher for the Nifty. No one's complaining though. We've made our record high and this is going to be a record high of a close if we manage to close around these levels. Nifty Bank too, closing in on 30,500. That's been the outperformer in today's session, 1.3% higher. And broader market space too is moving in tandem. Just quickly taking a look at what's been happening on the turnover, and we take a look at what's happening across Europe to get a sense of how the rest of the globe is shaping up. So it's a big day in terms of the volumes, at least on the futures and options side. And even in the cash market, yesterday's close was somewhere around 30,200. We're already at 30,100. So by the time we shut shop, can anticipate a number closer to 34,000. For the futures and options side, 9.5 odd lakh crores is what we've got right now. Rest of the world, and Europe particularly, is doing okay. DAX is up about 0.5% plus. FTSE though trading slightly flattish. Dow futures coming up on your screens next. That too trading with gains of closer to about 1/3 to 1/4% right now. That's what we got in terms of the overall market mood. But our technical experts is still here with us, and joining us on the show is Avinash Gorakshakar of Joindre Capital Services. He'll be here with us in just a few moments. I want to get to you first off, Sacchitanand. Over the last few minutes of trade, and we've been talking about how Tata Motors has moved up in the recent past. But is there a tactical trade here now that it's at these heady levels? Do you see profit taking coming into the counter? Okay, I don't think we have Sacchitanand on the line. But Amar Singh, if you can come in on Tata Motors.
Yeah, sure. Looking at Tata Motors, I would say technically from a short-term, intermediate-term trend continues to remain extremely strong, and the momentum is not showing any signs of decrease on the buy side. However, what we are seeing on the long-term charts, the monthly charts and the quarterly charts, the stock is moving out right now from the oversold territory. So that means there is more upside to the stock. And the stock ideally would meet with resistance somewhere around 240, 245, because technically that's a very crucial resistance zone, and also one of the major and significant moving averages are around those levels. So 240, 245 is a level where one can definitely look at booking profits. On the downside, the stock seems to have made a good base around 215 levels or so. So that's a range from a short-term perspective, 215 on the downside and 244, 245 on the upside.
Okay, that's Tamu for you, not doing too much right now. But remember, even in yesterday's session when the stock was up, we did see majorly short covering on the future side for this counter. Before I head across to our next guest, I just want to pinpoint two stocks, Adani Gas and Adani Green. Both of them have been doing pretty well in today's trading session. In fact, Adani Gas has touched 52-week high. Green is up 17% higher right now. And gas, last one I checked, was up, 9% at levels of 142. Let's get in Avinash Gorakshakar of Joindre Capital Services, who joins us right here in the studio. Hi Avinash, good afternoon. Well, good day for the markets. We've touched fresh high levels, but I guess the talk of the markets today has been Jet Airways. We've had a detailed discussion on that one. My question is, but on the other airlines which are listed, and that's Indigo, which has touched lifetime high levels, and also SpiceJet. So Jet gets grounded, its advantage for these airlines. Would you recommend buying into them?
I would believe that, I think despite the fact that headline numbers for both the airlines are going to be pretty challenging, considering that crude prices have gone up, I think Indigo definitely would benefit, from the fact that if Jet gets grounded and no solution is in sight over the next, say, 2 to 3 months, I think that is definitely going to create a lot of scarcity of flights, which is going to be obviously capitalized by both Indigo and SpiceJet. So I think from a near-term perspective, the markets are probably betting on the fact that there could be a lot of market share gains, and obviously that means definitely incrementally a big amount of top line getting shifted from Jet to Indigo. So I think yes, if the stock corrects or maybe is available at a slight lower price, one should definitely look at it, because I would believe that more or less I think it's going to be a pretty challenging task to actually now find a strategic investor, and until Jet gets that liquidity push, we are not going to see Jet into full form as of now.
Yeah, but the question is, so let's work with an assumption that we do not know which way Jet will head, Avinash. Is there merit in trying to own a SpiceJet northwards of 100 or 110 odd that it is right now at? It was great maybe at 75. Is it great with SpiceJet at 129, excuse me, crude still at 70?
No, I think, Neeraj, from a near-term perspective, if you look at the kind of cash generation, I would believe that Jet would still have a lot of trouble generating, positive cash flow. And if you compare that with Indigo as well as Spice, I would believe that, they have reasonable debt on the balance sheet. And despite the fact that crude prices have gone up, they definitely are in a better position to actually generate decent operating cash flows. The bigger reason for Jet to go down in red is primarily because operating cash flows have been negative for a long time, and they have been burning a lot of cash. So I would believe that, yes, I think probably if somebody has a long-term view, I would believe that probably Spice and Indigo could probably be more stable players compared to Jet. Jet is definitely going to take a lot.
My question is just that, should an equity investor buy into a SpiceJet at 130? I'm not comparing it to Jet. I'm saying a standalone, should you buy a SpiceJet right now?
I think from a short-term perspective, Neeraj, it could happen that till the time this entire jet saga ends, you're going to see a lot of action for the airline companies. But fundamentally, I wouldn't like to buy, considering that fourth quarter is going to be a bad quarter for all the airlines. I think it's not going to be a great quarter either for Jet or for Spice or Indigo. But yes, Jet could possibly show a horrible quarter as compared to the other two players.
9.5% off for Jet in the session today. Keep that at the back of your mind. Some other high flyers which have come off today included Rain Industries down about 4%. Oberoi Realty is corrected about 3.5%. Avenue Supermarts is down about 3%. 1412. So keep all of these at the back of your mind when you're looking at the mid-cap end of the market. What's gained in the last few minutes of trade? I was trying to look at even the mid-cap space and have any stocks moved up significantly in the last 10 minutes? No, not quite. Maybe Indiabulls Real Estate has moved from the red into the green, but that's few and far in between. The big mover has been Adani Gas. Avinash, what's happening here? All the Adani Group stocks have turn by turn had an exceptional run in the last 3 or 6 odd months. Adani Gas has been on a different trajectory. It's at life highs now.
No, I think, Neeraj, clearly the natural gas space has definitely been considered quite attractive, considering that, whenever crude prices go up, alternative fuels like CNG and, city gas definitely have been a preferred choice. So longer term, definitely, this business has a strong viability kind of potential. And I think looking at the fact that they have recently bagged few licenses, I think that would definitely help them grow. If you compare both the players, despite the fact that this is a profit margin restricted business, both of them are pretty cash rich, both Mahanagar as well as IGL. So clearly here it's a new kid on the block. I mean, it's available probably at much cheaper valuations if you take the longer term potential. I would believe that yes, somebody who's got a 2 to 3 year kind of horizon could still make some money, considering that the business has got a long term kind of earnings visibility.
Avinash, very quickly, new kid on the block then. What did you make of the listing of Polycab today? Do you think retail investors particularly who did get some bit of subscription, should they book out today or stay invested?
I think they should stay invested now, considering that almost 60 to 65% is the B2C business. They should be commanding decent valuations, and despite the fact that their ROE is not very high, around 15%, I would believe that not only the pop-up on the listing price, but definitely the coming 2 to 3 quarters should be reasonably good. So I think definitely a good medium-term kind of pick.
Okay, stay invested into Polycab. If you have that, it's had a good listing in today's session, up almost 22%. I remember the issue price was 538. All right, moving on to Wipro, which has fallen in line with its larger peers to post a muted growth in the March quarter with continued pressure on the margins. In fact, Agam is standing by to tell us what the analysts are pricing it from the numbers. And Agam, if I look at the internals right now, I think the stock was moving higher throughout this month, but particularly in today's session, just ahead of the numbers, there are a lot of fresh shots being built up here.
Well, there may be a lot of reasons behind that selling, but at least in terms of expectations, we are likely to see a 2% uptick when it comes to the IT services revenues for this particular quarter sequentially. It's been a quiet quarter. It's a seasonally weak one, especially for a company like Wipro, which is why we aren't seeing as much anticipation when it comes to growth in its top line in rupee terms. Margins are expected to remain flat. In fact, to come off to a certain extent by as much as 20 basis points to around 18.2. And profit could consequently decline by 0.8% on a quarter-on-quarter basis. It could be a mixed quarter when it comes to various verticals. We are watching out for the financial services vertical because we really don't know how that one is panned out, considering the diverse moves that we've seen in case of Infosys as well as Wipro and TCS. But when it comes to manufacturing, healthcare, as well as life sciences verticals, we are expecting mixed quarter coming through. Don't forget, there's been a little bit of appreciation of the Indian rupee for the quarter that could also move against margins. We're watching out for the buyback as well. That'll be another very important factor to watch out for, considering the expectation on the street is a buyback worth around 11,900 to 12,000 crores. Also, the company has enough cash on its books to remain fairly flexible there, but there could be an outflow or rather buyback of around 6% equity. But if you leave the buyback aside, we're expecting a very quiet quarter for Wipro.
Agam, thanks very much for that. That is Wipro buyback, the third buyback, a likely announcement of that could happen today when they report their numbers. The stock, though, is down about 2.5%. I think the major move came about a few weeks ago when there was the announcement of a likely buyback. So in anticipation of that, there was anyways that big move that came in. Last 1 month, though, stock's up about 6.5%. Amar Singh, one last question before we let you go. Anything within the IT pocket, maybe a large cap name, because we've been seeing TCS moving up the way it has on the back of its numbers. Has that created any more technical triggers on the upside for the counter, or anything else within the mid-cap space?
I would say that one can look at Mindtree, because if you look at Mindtree, it has corrected today, but overall, technically, if you look at the charts, Mindtree continues to remain strong across various time frames, and so any correction, currently it's around 973 odd levels, so any correction towards 960 odd levels can be a level to look at buying and a buying opportunity. So 945, 960 can be a very good zone for buying Mindtree, and the possibility of it pulling back to its earlier highs of 985, 990 is quite possible. So one can look at Mindtree from a short-term trading perspective because the trend remains positive.
It's time to take a look at what dealing rooms are recommending in the session today. Yatin and Darshan are here with their channel checks. Good afternoon. Hectic day of trade, but at live highs. What are you learning from your sources? Darshan, let's start off with you first.
Yeah, so I think banks as a pack are doing extremely well, be it an ICICI Bank or IndusInd Bank, which has been spoken about today. Above the 1800 level, it's up almost close to 4% on decent volumes. Dealers do indicate that some of the foreign funds are actively pushing this to the clients, and that is there is accumulation by some of the FIs on the counter. The other counter is Idea, which is also moved up almost 6% in trade. Some of the HNIs are actively accumulating the counter. They believe that the rights issue is successful, and then the traction and the downside pretty much is limited for the counter. And as a momentum play, dealers indicate that Shree Cement, which is trading at a fresh 52-week high, there is traction, decent volume seen on the counter. Dealers indicate as the momentum probably will continue for Shree Cement. But Yatin, what are you hearing?
Well, DCB Bank, and that is one stock wherein yesterday, after a 2-3% cut, we are looking at a 5% up move in trade today. Dealers are talking about short covering, which has happened in trade today and probably could continue for trade tomorrow as well. So DCB is one stock which is on the dealers' radar. Wipro, of course, they will come out with their earnings. The stock has fallen after, some fraudulent transaction with some client on the platform. Of course, details are yet awaited in details from the company, but dealers do indicate that at lower levels, a lot of domestic funds are buying, IT stocks at this point in time. And finally, we also have Motherson Sumi, which is surged up in trade, 4 rupees up for that one. Dealers, on the basis of FNO trend, are recommending a buy today, sell tomorrow kind of a strategy on the stock.
Okay, thanks a lot for that. So that's the verdict on some of these stocks. But well, Navneet is back on the show, and Navneet, stocks which could enter or come out of the FNO ban.
Well, Neeraj, 3 stocks. First, the one which could enter into the FNO ban for Thursday's trading, that's Vodafone Idea. As you can see, the overall open interest as a percentage of market-wide position limit yesterday was 90.3, and for a stock to enter into the FNO ban, it has to exceed that. It had actually come down, but it is exceeding the 95% mark, so watch out for that one. Which could come out is something like Workhard. It was 80.5, and Dewan Housing. If you look at the trends in today's trading session, there is some bit of unwinding which is taking place for a lot of these option strikes of these stocks, which indicates that it could fall below that mark of 80%. Just a caveat here, the trends can change in the last 15 minutes of trade, but as of now, it looks like Workhard and Dewan could come out of the FNO ban.
Would you trade these is the question. Sacchitanand, any thoughts?
Well, I would not like to trade Workhard right now. Definitely will give it a pass.
Okay, Workhard is currently not doing too much. Actually, it's the counter which has always been in the FNO ban for majority of these trading sessions. What I want to pull up is the Coal India futures, if we can try and do that. Yesterday, the stock was up around 2 to 2.5%. As you can see, the futures are trading at a discount, but there's a lot of build-up which has come in terms of OI build-up. 23% higher on the futures. Sacchitanand, if I could come to you, is there any trade that you're seeing on Coal India? There was a move yesterday, but in terms of the future side, there's a lot of action that has come in today.
Well, definitely, the stock has been in limelight since last 3 trading sessions. In fact, we were expecting the stock to, move towards 255, 260 zone. I think today's swing is somewhere close to 257. So I think probably, a closing is something that will be, very important from here on. So in case if we see a firm closing about, say, 253 or somewhere like that, probably we can see further up move in this particular counter. If you look at the overall structure, this entire formation looks like a rounding saucer kind of a formation, which is awaiting a price confirmation on a closing basis. So as of now, I think in case if someone is holding this particular counter, I think they should continue with their long positions. The stop loss for the trade should be placed around 246, and a closing is something which will be very important. So once the closing is from probably a fresh targets on the higher side would evolve, and the pattern is indicating targets right up to say 274, 275 zone. So I think today's or maybe one should wait for a couple of trading sessions, and if the stock manages to sustain about 255, then definitely 270, 275 trajectory will be open.
All right, that's on Coal India. Aside from the fact that we've got Wipro coming up with results today, when we come back on Thursday, Reliance Industries reports its numbers. So that's going to be the other big one that we're going to be watching out for. And not just the oil and gas business, but numbers from Jio as well will lay the ground for comparison between Bharti Airtel and Vodafone Idea. Avinash, Reliance Industries and what, according to you, are you expecting? The stock, though, in the recent few days, there was a brokerage target price cut on Reliance, because of which, the stock has actually not done much in the last 1 month. It's just been up about 2%. But do you feel that there is more case to start adding the stock into the portfolio?
No, I think what kind of commentary comes from the Jio business is important. I think they've already touched a number of 30 crore customers, and I think going forward, what's the outlook of the management on the ARPUs as well as on the broadband business is going to be very critical. The stock may remain range bound, but I think the clear trigger for the stock in the near term would be how further scalability can come in the Jio business. I think because that's going to be the key trigger for the stock. I wouldn't be surprised that once the Jio numbers are out, the markets would start looking at even comparable competitors as how the company has done on a segmental basis. But overall, I think the stock could definitely react positively once we get a better commentary, once we come to know what's the kind of strategy going forward on the Jio part of the business.
All right. So while it's not done much in the last 1 month or the last 1 year, though, the counter has given returns of about 43%. So that's not bad at all. Let's get in some closing ideas. We're 8 minutes away from market closing. So Sacchitanand is here with us. Sacchitanand, what's going to be your key trade that you're going to go into Thursday with?
I'm liking the structure of Tech Mahindra. In fact, the way the stock rebounded from the supports of around 780, the entire recovery looks like a V formation, and in fact, today's closing is also decent. So from a stop loss close to around 795, so the stock is quoting somewhere close to 800, 801 on futures. We're expecting that this move could continue right up to 815, 813 zone. So very good BTST candidate. 795 should be the stop loss for the trade on futures, and 815 would be the probable target.
Okay, buy on Tech Mahindra. Let's pull up Deepak Fertilizer. Remember that stock's been in focus after the news came in that they've started commercial production from their Dahej plant, and we've seen a big move coming by. Avinash, any view on this one? A lot of our viewers are actually asking what's the road ahead for something like Deepak Fertilizer?
I think clearly, the Dahej facility would definitely contribute significantly next year. Our sense is that, the chemical business and the fertilizer business should obviously show better numbers over the next 1 to 2 years. But clearly, I think if you look at the margin picture, obviously once the Dahej facility commences, they should be getting some benefit out of the operating leverage from this plant. So, I mean, I would suggest a hold, but clearly, I think, from a near-term perspective, the stock has to, the company has to show improvement in its overall operating margins, which in the third quarter were actually under pressure.
Can I just pull up DCB Bank, the intraday chart of that one? Remember yesterday the stock had tumbled almost 2.5 to 3%, but it's back in action. It's currently a day's high. A lot of action seen on the futures side. Sacchitanand, on the charts, what do you make of yesterday's fall, and it's bounced back from those levels, currently up 6% in trade?
Well, if you look at the overall structure, the structure has been very good. In fact, yesterday we did, expect the stock to fall down towards the levels of around 188. In fact, today's low is somewhere close to 191, and the stock has rebounded. So, it is in a consolidative structure. In fact, 210 on the higher side would be the breakout zone, and I wouldn't be surprised if we see a follow-through move post that. So overall, I think the bullish structure for the stock still remains valid, and it will only be deteriorated in case the stock starts slipping or closing below 185. Until then, I see the stock performing good. In fact, it could be one of the outperformers here. And from a momentum perspective, I think 210 would be a pre-level. We do expect that the stock should climb towards those levels, and a breakout from that level could open up further levels. But as of now, I think this particular momentum could continue right up to 210.
Not an ICICI, not an Axis, but the mid-size variety. Which is the best bank to buy? Would you buy an Equitas with Ujjivan AU, the small finance bank variety, or would you buy one of the federal DCB banks, RBL banks, IDFC First Bank variety?
I think within the microfinance player, I think Ujjivan.
No, I'm leaving it to you.
No, I think
out of the 7-8 names.
No, from the smaller microfinance names, I think Ujjivan definitely should do well. Their third quarter numbers are also quite good, and I think after a long period, we are seeing traction coming back on the microfinance segment. So clearly, if somebody has a medium-term view, Ujjivan definitely would definitely give a better risk reward. And I think from the smaller banks, we still continue to be positive on something like a federal bank, a large NRI base, and a very good kind of CASA ratio. I would believe that within the smaller banks, these are the banks which possibly could reward investors, considering that the larger corporate banks have actually gone up quite significantly now in the near term.
All right, that's in the banks. I just want your view on the real estate market. Indiabulls real estate for one is up again in today's session. Last 7 days, 20% gain on that counter. Godrej Properties has seen some profit taking in today's session, but nonetheless has had a swell run up until now. The stock actually making record highs for quite a few days in a row. The last 7 days particularly, not done a whole lot much, but still at about 940. What are you expecting from real estate in terms of posting the kind of numbers, and whether or not any positive surprises are expected? And now that we have the first street already on the block, is that giving you an opportunity to play the real estate space in a better way?
No, I think again real estate would be a selective space, but I think within this space, I think players like Godrej Property and Soba Developers should do well. Their pre-sales numbers were pretty strong, and I think clearly the markets would be looking at better Q4 as well as a better Q1 of FY20 numbers. So I think Soba and definitely Godrej Property would definitely give better numbers, and I think these are more stable players, Devina. In the real estate market, I think it pays a lot to look at companies which are very less leveraged and obviously have a decent earnings visibility.
Okay, let's start wrapping up the markets for our viewers. Avinash, Sacchitanand, stay on. We'll take in closing thoughts from you. What a robust day of trade, and what a fabulous close to a day when we ended at life highs. 11794 will now go down as the level at which we've top closing highs for our markets. In fact, the top intraday high is also about 10-15 odd points around these levels. The Nifty Bank too packing a serious punch, 450 odd points, about 1% higher for the Sensex. So good going all round. Mid cap and the small cap, these indices too did reasonably well for themselves. They didn't correct too much. That's the key thing. The BSE 500 having a larger proportion of the larger companies, therefore doing much better. But I'll speak about the large caps, which have done better than what the broader markets indices have done. And then we'll, of course, now hand it over to Navneet for what's happening at the mid caps and small caps. ICICI Bank, top gainer after the Goldman Sachs upgrade, up 4%. IndusInd Bank, 4%. Titan, 3%. Grasim, about a couple of percentage points. Asian Paints, about a couple of percentage points. Hero MotoCorp, 1.5%. And Maruti, gaining another 1.5%. Autos have been the strength of this rally the last few days. Just that banks have taken center stage today. What's not done well? Wipro down 2% out of numbers. Infosys corrects further, and this is quite remarkable, the discount that exists now between Infosys and TCS. Z correcting a bit, but those are minor losers, not too many losers save for Wipro, Infosys and Cipla, and a lot of gainers including the banking stocks that painted the picture for our markets, but a bit of a narrow move, you would have to say. Not that too many people would be complaining. What about the broader markets though, Navneet?
Well, Neeraj, the picture is looking pretty good. I've got more of gainers on my list, and starting off is the aviation pack. Indigo and SpiceJet today surged on news of that Jet Airways could be temporarily suspended. It's just according to news reports, and Indigo touched its all-time high levels, closing 7% higher. Look at SpiceJet, 12% higher, closing around the levels of 133. Adani Green is the other one which perked up in today's trade, had a good run-up. Adani Green finally closing around the levels, up by almost 18.5%. And PC Jewelers, remember the stock's been moving higher in the last 4 to 5 sessions. In fact, just in the month of April, it's up almost over 70%. It's a beaten down counter, but some bit of buying interest has come in the past few sessions. DCB Bank, which was down in trade yesterday, today it bounced back from those lower levels and closing the day around the high point of the day as well, 5.5%, around 202.5. Adani Gas touched 52-week high, and also on the losing side, as I mentioned, where Indigo and SpiceJet were up, Jet Airways was down on back of the news that no resolution has come by. Lenders are still not infused 1,500 crore rupees. And finally, you also have something like Reliance Capital that in the second half of the session, I think some selling pressure came by, and the stock's closing around the lowest point of the day, down 7%. They've been a good day. I think it's all-time high closing for Nifty as well as Bank Nifty.
Yeah, most definitely. And nobody is complaining. It's a truncated week, so we could do with a bigger closing pop for today's session. 3 days of trade this week, so we're still left to go for closing, a few seconds to go, but this is roughly where you're going to shut shop with 460 odd points in the Nifty Bank. Sensex closed to 1% higher, and the Nifty having a record close. Not managing that 11,800, but still about 1% 100 odd points high is what you've got.
Well, and yes, the market breadth, let's just pull up that as one. I think since the morning when the market opened, the market breadth was looking pretty good. But as you can see, the chart is indicating there was a gap at the start, but it got converged towards the end. So probably some bit of selling pressure. By the end, it was 1:1.
Yeah, petering off at the end. And the contributors will come up next. And following that, we'll have the turnover numbers. So banks all the way in terms of the gainers, and heavyweights. So L&T also, adding some weight at the back. IndusInd Bank, HDFC Bank, ICICI Bank. Losers on the flip side is IT as a pocket, and Tata Motors gives up some, so some profit taking.
Yep, Tata Motors was up almost 4 to 5% yesterday. Let's just check how the participation panned out. It's a truncated week. Tomorrow's a holiday. But guys, F&O volumes definitely picked up from yesterday's 6 lakh. It's almost 10 lakhs. And NSE cash too picked up from yesterday, from where we left yesterday. Yesterday was somewhere about 30,000.
30,000, yeah. So this is definitely a better number.
I think there were some block deals which took place. Probably it could be a result of that one.
All right, that's what you've got in terms of the market close. Let's quickly get in some closing comments from both our experts who are here with us. Sacchitanand, we're going to start off with you first with regards to how you're stepping into trade come Thursday, and what is the most crucial thing that you will be watching out for?
Well, at the beginning of the show, we discussed that we expect the markets to, be more on the consolidative side. In fact, 11,850 is the upper end of this particular range. And on the lower side, 11,600, 650 is holding as a very good support. So we expect this particular mean reversion kind of a state to continue. If you look at, the momentum indicators, especially the RSI, it has been quoting a negative divergence. And this is the third point of divergence that we are observing on the daily scale. Even on the intraday scale, on the 30 minutes chart, that was the observation, and that's why we recommended, shorting this particular up move that we have seen in today's session. So probably we'll see how it, how the day begins on Thursday. But as of now, I think, we are at the resistance zone, and probably taking off some profits would be a good strategy. On the short side, as I said, 11,877 should be the critical level on Nifty futures. But on the lower side, we are not expecting any major correction. I think the corrective move could find support again around 11,600, 650 zone.
There is talk of MSCI rebalancing happening, and the weightage of a couple of these insurance companies moving up as well. A big trigger, you think, or something that will pass?
No, I think it would definitely be a sentimental booster, and I think stocks which are likely to move up possibly could be HDFC Life and ICICI Lombard. So I would believe within the choice, I think HDFC Life definitely would look up, because clearly in terms of the opportunity and in terms of the parentage, I think clearly there could be a little more appetite, considering the fact that this becomes an index stock, which is quite important.
Okay, Avinash, just before we thank you, one mid-cap idea that you can think of, because large caps are doing all the heavy lifting. Any mid-cap stock that one can invest in?
I think within the mid caps, I think Motherson Sumi, which today some positive news flow has come in. Volkswagen has actually given a positive commentary. I would believe that once we see better numbers, from the domestic markets, plus the European markets also settling down, these valuations definitely look attractive from a long-term point of view. So Motherson Sumi definitely, somebody has a medium to long-term view should actually accumulate the stock.
All right, we'll leave it at that. Avinash as well as Sacchitanand, thank you so very much for joining in and sharing your thoughts with us here on the show. On that note, it's going to be a holiday tomorrow, so we're going to see you Thursday morning. But from Navneet, Neeraj, myself and the entire team that's put this show together, thank you so much for watching.
The market wrap comes up next.